Okay, okay. Um, so we're live, and I just wanted to give a recap because ultimately I was really busy at work. I couldn't watch. I couldn't watch the screen. I could really not day trade. I couldn't really trade, and I really didn't have an idea of which way the market was going. It looked choppy as hell. There were opportunities, but I just thought it was crazy to buy calls, to be honest, at these high levels. And with interactive brokers, one thing I noticed was that once we broke above 17,600s, 17,630s, like look at this. The the strikes, they go from tens to like 15s to to they go to $25 increments. So that's $2,500 for people who are new. Look at this. $25 increments. That's crazy. If you get this wrong, you lose a lot of money. And I did not want to be a part of that. So I just sat out. I almost did get filled at one point though. I was trying to buy the 1630 puts. Um, I was a bit conservative. Had I just left it alone, there's a good chance I probably might have gotten filled. But yeah, I missed out on those. Um, but yeah, so what ultimately ended up happening was I broke one of my cardinal rules. Normally, what I do is I don't like trading while I'm at work because I can't watch it. And today was a prime example. They had me doing stuff that I normally don't do, that it's not in my routine. And then I don't like trading while I'm getting ready to drive. This trade was placed right when I was getting ready to drive. Market suddenly dipped. I saw that it was dipping and bouncing back, and I tried to buy on a dip. And I saw this. I changed my prices a bit. Um, Looking back at how this played out, I probably should have lowered this to 23. Had I lowered this to 23, I would have been able to get out with only like a measly $100. Um, the real price was somewhere around it. The second I bought it, it dropped down to like 21, 22, maybe even $20 for a little bit, and then it just stuck around. So you can see like there was a good 4 minutes. Um, it did recover, and at some point it was trading somewhere around 25. So I thought, okay, one big push, and then I can just leg in by selling the 50s or just selling this for like a $100 profit. But I just started seeing like the whole market struggling. NDX was looking really shaky, and then it started dropping, and I decided, let me get some kind of protection here. So I bought the 480 puts expiring same day. All of these expire same day, which is not ideal. So I bought these puts, and it was just free fall. I thought, let me just do a $10 wide spread, so in case I'm right, I can still get paid out $10, and that'll soften the blow of this. So I was able to take a credit. It's only $40. So $40 would be mine no matter what. And then as it started chopping back up, I decided to buy a put spread. So I put the put spread in because it looked at one point like NDX was going to bounce right back up, and I was going to be able to sell the 17,650 calls. It looked like it because NDX did bounce. NDX dropped to like, I don't know, 610, 605, 600, and then it bounced right back up to like 630. So it was very close. It was very close. Like, had I not bought at 25, I probably could have gotten out of this trade a lot smoother. It was very close. But, the second I bought this, I was able to get filled as it shot up. But the second I bought it, it started dropping. NDX, the actual price started dropping. So I decided to pick up a put. Bought this put for 23, legged into it. So I wanted to be closer to the action. At this point I didn't have much money left. So I had to do internal transfers. I have about 6 accounts on Interactive Brokers, so I and 2 accounts with just cash lying around. I think like four something, and then another has like 200. Total right around $600 that I brought in. So I was able to just afford this. Paid 23 for it, legged in for 23.10. So I took in like maybe $8 after fees. Also was able to do this again at 20. Also legged in. Now this is kind of where my big regret is. I probably could. This was a good fill. This was a good price at the time. I probably could have held on to see how things would have played out. And had I held on, I probably would have been able to get 24, or even if I was willing to gamble a little bit, 25. So could have probably gotten two, three, $400 more, or if I was willing to roll the dice a lot more on this. Um, but I was just trying to be conservative and hedge some of the risk. So with that put on right now, it's about $2,300. I would need It's about $2,300 if NDX dropped at 17,500, which isn't a bad bet. So if it dropped at that, it would be 2,300. I would take a $200 loss, give or take. So that was what I was playing for at that point. And if it dropped below 570, it would be profit at that point. Um, so NDX starts dropping and dropping and dropping, and I was just able to buy the 470 calls to try to hedge a little bit. Sold the 475 calls for a nice little profit. Did it again. This time I was kind of worried about it, so I didn't quite get a risk-free spread. Um, but had I waited a little bit, I probably could have gotten like $100 credit on this. It did bounce back. And then at the very end, this was sometime around 1:30, 1:50. Oh, okay, somewhere around 2 p.m., 2:23 p.m. I'm thinking I have a ton of risk on the upside. So if NDX shoots up, right back up, I'm kind of exposed. So I needed a way to hedge this risk. And I decided to get a $15 call. Originally, the price was set at 19, but I saw that it was dropped it to 18. Probably should have dropped it to 17, 16, because I got automatically filled. NDX was on life support at this point. It was somewhere around 17,500, 17,430, 440, somewhere around that price. It was dropping hard. So I bought this, and the profits came in initially. I probably, hindsight being 2020, I probably should have sold this for 200 and then bought right back in at that same price and then legged in, but I legged in for a $400 gain, for $14 credit. So the spread was about $4. I might have been able to get this cheaper had I just bought it directly from the market, but I'm not completely sure. It was moving fast, and I just did not want to take that chance. So this is my P&L is showing for the day 529. That's not actually accurate. Looks like I took a $130 loss on the spread. My these spreads are pretty much worthless. They've got like $600 in value left. Um, and then this was from yesterday. They expired today. They were spreads that I was holding. Let's see. Okay, no, I can't show you guys. But anyway, these are basically what's going on. Okay, there we go. Are these trades though, or oh, one last thing. I also bought for the first time in a while NASDAQ futures options. So I bought I was actually trying to cancel this order, but I paused the wrong order. So I got filled at 180. Sold it for a small profit at 120. So that's where the $42 in realized gains is from. These futures. Um, so when you see the daily P&L, my profit isn't actually 529. It's it's actually like 220 once you factor everything in. So my put spreads went to zero. My call spreads from yesterday hedging the put spreads maxed out. Um, it's also contribute. This isn't. This is partly because of the call spreads and everything, but this isn't really actually a legitimate. This isn't the real number. I'm about to show you guys the real number. The real number is Thinkorswim. It's right here. So on Thinkorswim, I mapped it out. Most of the day, we were towards the end of close, about 2 3 hours. We were somewhere around here. So I'm thinking I'm gonna pick up like $800, give or take. And then we started climbing, and I got uneasy because I'm seeing it inch closer, and I'm just like, is this really gonna happen? I don't know if it's going to happen. I'm hoping it doesn't happen, but I was just trying to run out the clock. And right around here is where we stayed for like the last hour. It was ping ponging between 70s and 80s, and then started going to 90s, which got me worried, but it would always fall back. I was up about $1,300 at this point, and then the last 15 minutes was where it really started to annoy me because it was somewhere around like 17,490 to 17,5 like 10, but it would always pull back. So I'm thinking at this point, like, why not roll the dice? I did have a working order in to buy the 17,500s, and that's really on me for moving the goalpost. I would have been filled had I just kept the original price at like $4, $5. So you can see like this ended up being a pretty insane move. Towards the end, it was ping pong in between 17,496 to 17,503, and like the last 2 minutes, it was right around 17,500, 17,503, which I still would have profited pretty well, and then it just shot up. It just shot up to 17,507, which was still pretty good, and then the last 20 seconds, you just see it move. So yeah, this is the real number. My profits for the day, excluding futures, $264. This is before commissions. I haven't figured out commissions, but willing to bet commissions are like negative 20. So like excluding commissions, $264. That is my profit. Had it stayed under 17,500, my profits would have been $2,264 excluding commission. And had it been below 1760, my profits would have been somewhere around 760. So yeah, and had it just shot up to the moon, like after, like I would have started profiting somewhere after 17,550. This really doesn't make sense because the calls that I'm holding would be pretty much worthless at that point. Huh, maybe. I'm not sure. But yeah, I guess with the futures, it brings it close to 300, but then you have to worry about commissions. Um, what I'm gonna start doing is I'm gonna lower the payout. Well, I still in about like starting in about 2 to 3 weeks. I'm gonna lower the payout from $500 a day to like me only needing to profit $250 a day before I pay out. Um, I'm assuming that I'm gonna still be profitable within the next 2 weeks. So as long as I can maintain like pretty healthy growth, I should be able to keep paying out and lowering it to where it's like if I see like a profit of like $100, I'll pay out people. Or if I'm only like making like I don't know $40, I'll just pay out the $40 as goodwill. So yeah, I mean today was not a good trading day. It went from $40. I I only really made like it went from me making really like $42 to me losing at one point like $800 to me for like the good chunk of towards going into close to me somewhere around 800 to like $1,300. And then in the last like 15 minutes, me looking to get screwed, in the last 3 minutes I got screwed. It does look like the market is going down though, so I guess that's one good thing. That's one positive. If it does go down, it would need to go down a lot more than that. I mean, Q would probably need to be in like the 417s for my put spreads to really come alive. Oh, if you guys are wondering what my position would look like, what the total from yesterday. So yesterday, this is what I paid. Remember, I bought the puts and then I legged into them. So I legged into the puts for about $140. Debit, not credit. I wasn't positive on this. And then I decided to hedge this a little bit by buying calls. So yeah. Anyway, that's about it. Make sure you subscribe to my newsletter on Substack. Subscribe to this channel or my Twitch. Leave a comments, like, subscribe, share the video, and you'll automatically be eligible to get cashed out from the 5% pull. You do need to have a way for me to pay you. So like PayPal, Venmo, figure it out, and message me once you like comment on a video and stuff like that. So I know who you are and I kind of have you top of mind. Other than that, that's it for the day. Only a $260 something profit. but profit is profit.